On today's bonkers.ie podcast episode, myself, Caoimhe, along with my colleague Daragh, the head of communications at bonkers.ie, will be taking a look at home insurance and its rising costs. We'll hear from a very special guest, Moyagh Murdock, the CEO of Insurance Ireland, who will tell us all about the growing issue of underinsurance and how consumers can avoid it. So, if you're one of the many who have questions about home insurance, keep listening to gain some valuable insights. Hey Daragh, welcome to the podcast.
Thanks.
Now today we are going to be discussing home insurance, which is a type of property insurance that provides you with the financial means to repair your home and replace its contents if the unexpected were to happen, such as a burglary or a fire or flooding. Now currently in Ireland we are experiencing a little bit of a cost of living crisis and a lot of inflation hikes. And unfortunately, home insurance premiums haven't been left unscathed by this. Premiums have increased dramatically. But before we get into all of that, Daragh, could you explain to our listeners the different types of home insurance policies on the market? Because there are three different types.
There is. So the main one is buildings insurance. And if you are taking out a mortgage, you'll have to take out buildings insurance before you can draw down your mortgage. Buildings insurance basically protects your home if anything serious happens, such as a flood, a fire, a really, really bad leak, and your home is badly damaged and it needs to be either partially or fully rebuilt. That's where home insurance comes in. I mean, even if you didn't need it for your mortgage, you would still want to have home insurance in place.
And is buildings insurance compulsory for everybody?
It is. I mean, if you have a mortgage, it is compulsory. Now, technically, if you were to pay off your mortgage, you could then cancel the home insurance policy. But that really, I would never really recommend that people do that. If you are, though, in an apartment, the buildings insurance will usually, though, be covered under what's called the block policy. So the management fee that you pay to your management company, that will cover the buildings element. So you'll only pay content insurance. And so content insurance is basically anything within the home that you could maybe take with you. So think things like furniture, appliances, things like that. So if maybe you could pick up your home and shake it, everything that were to fall out would be what's covered under content insurance. Now, sometimes buildings and content insurance is just referred to as the same thing. And most people do take out buildings and content insurance. If you have an apartment, you would take out content insurance just by itself because the buildings element is covered under the block policy, if that makes sense.
And that would be the same if you're renting a home from a landlord?
Yes. Now, obviously, with the landlord, in some cases, they might be paying for the content insurance as part of the agreement. In most cases, though, they won't. So if there are any renters that are listening, do chat to your landlord. Check, first of all, whether or not you're covered. Probably won't be. The apartment or the home will just be covered in case of, a fire or flood under the buildings element. So you'd probably need to go and take out your own contents insurance.
I don't think a lot of people are aware of. Now, with contents insurance, you were saying that covers the cost of items in your home. Then what is the purpose of specified items cover? Because this is quite confusing sometimes.
Yeah, and that is a good question. And it is a bit confusing. So specified items is where you, I suppose, specify or call out certain items in your home. So with content insurance, when you are insuring the home, you'll insure it for like a block amount. So it might be for 30 grand, 40 grand, 50 grand. In most cases, the minimum is actually around 25 grand. And that's supposed to cover pretty much everything. But if you have, the best rule is if you have an item and it's a personal item, particularly an item that you can take outside of the home and it costs over €1,000, you should call it out or specify it separately on your insurance policy. So think of things like a musical instrument, a bike, an expensive camera, a tablet. If in doubt, call it out. You may ring up your insurer and say, hey, I've got a new laptop here. Do I need to call that out? And they might actually say, no, actually, that's absolutely fine. But if you have an engagement ring that costs 25 grand, let's say, or 20 grand, absolutely, that's something that you need to call out. The best rule is that if it's over €1,000, call it out, specify it. And if you're in any doubt, chat your broker or chat your insurer and they'll let you know whether or not you need to call it out. The other good thing around specified items insurance is that usually as well it'll cover items that you take outside of the home. So for example, if you lose your phone outside of your home, you'll usually be covered. Often people get gadget insurance to do that, but gadget insurance can be really, really expensive. It can be like 5, 10, 15 euro a month just for one item, whereas with specified items it could cost you maybe only an extra few euro for all of your personal items.
And when you say that it's items that can can be taken out of the home if I go abroad?
Good question. So this is where you need to look at the terms and conditions. It's not going to be the most exciting reads that you've ever had. Probably going to be in quite short text or short font, but it's important that you do it. But the T's and C's will tell you whether you're covered. In general, you'll only be covered for maybe certain countries or for a certain amount of time.
Now, Daragh, as I previously mentioned, home insurance premiums have shot up over the year. In fact, according to the latest figures from the Central Statistics Office, home insurance premiums are now 18% more expensive compared to this time last year, which is twice the level of general inflation. So what exactly is causing this price hike, Daragh?
So the main reason is around construction inflation. So construction costs have increased quite rapidly over the past 2 or 3 years. They've increased well in excess of the rate of general inflation. So things like timber, concrete, glass. And that means that if something were to happen to your home, it's going to cost a lot more to rebuild than it would several years ago.
So, Daragh, are there any other things that influence the cost of your home insurance premium?
So there's a few main things. The first one is obviously the type of house and how much it's going to cost to replace. So somebody who lives in a 5-bedroom detached mini mansion is going to pay a lot more than somebody who's in a 2-bed townhouse. And that includes as well even maybe the type of roof that you have. So if you had, for example, maybe a thatched roof, that would be considered a bit more risky, and that's going to cost you more as well. Your address is important. So unfortunately, some areas are more prone to burglaries and robberies than other areas. And if you're living in one of those areas, you could expect to pay a premium for your home insurance.
That will be done by your air code as well.
Yeah, it'd be done by your air code. And then also, of course, and the value of the contents. If you're insuring the value for maybe 25,000 or 50,000, that'll affect things. And of course, if you then start specifying certain items, that's going to up the price as well.
Now, Daragh, we will have you back later to hear about your top tips on how to lower your home insurance costs without having to sacrifice your level of cover. But next, I'm going to speak with Moyagh Murdock, the CEO of Insurance Ireland, which acts as the representative organisation for the insurance sector in Ireland. And we will be discussing the growing and worrying trend of underinsurance that is taking the home insurance sector in Ireland by storm.
Protect your home and contents from the unexpected on bonkers.ie. You'll even have the option to add specified items cover to your policy. So make sure you get the best rate available by using our free home insurance service today.
So welcome to the show, Moyagh. Thanks so much for coming in.
Thanks very much, Caoimhe. Delighted to be here.
Moyagh, today we're going to talk about underinsurance. So over the last 5 years, underinsurance in the home insurance market has steadily increased. According to the Central Bank of Ireland, in 2017, on average, 6.5% of paid home insurance claims were underinsured. And now in 2021, that has more than doubled, with 16.5% of claims being underinsured. So can you tell our listeners out there, Moyagh, what exactly is underinsurance?
Okay, Caoimhe. Underinsurance happens when you have insured your home or your contents for a sum that is less than actually it would cost you to either rebuild or replace or reconstitute whatever happened to you during an incident that caused you to have a loss. So it can happen quite benignly, and over time you don't realise that things have changed. The valuations for rebuilding have gone up, or you may have built an extension or upgraded your kitchen, and over time you haven't realised, actually I need to look at that in my insurance policy. So really what happens there is, if you did have an incident, then you go to your insurance company, they'll come out and assess the damage and assess the repairs that are needed, but they'll look at your policy and see what you valued your home contents, your buildings for. And unfortunately, as you say, 16.5% of claimants are discovering they actually had it underestimated.
Okay, and so if it is underestimated, what does that mean exactly for consumers?
Well, there's a couple of examples I can give you. Well, the insurer unfortunately has to come out and look at it and say, well, you have a 50% underestimation of the value of your repairs there. And say, for instance, the house was worth 400,000, but you'd left it on your insurance policy for 200,000. Well, unfortunately, all you're going to get to repair that or replace that or rebuild that home is the 200,000, and that's why people are finding, much to their chagrin, that it's really left them with even more troubles than they had at the start.
Yeah, it really seems from that example that a lot of people are probably leaving themselves very vulnerable financially to issues like this occurring. Going back to the central bank, the average reduction in the claim payment was approximately 19% due to underinsurance. So what other dangers are with underinsurance?
Yeah, and I think what's happened there is before 2021-22, we had come through a very long period of very low inflation. So our repairs and our home improvements were pretty stable year to year. Over the last 2 years, we have seen rapid increase in inflation. We know how difficult it is even getting tradespeople to come out and do small jobs. I even got a price for my own home improvements and extension. I nearly fell off the chair.
Yeah.
So that has happened because of situations such as the Ukraine war, supply chain issues as a result of the Suez Canal and COVID, factories shut down, so the actual raw materials used for building and repairs, they have all gone up in price. So the danger is, even for small incidences in the home, it's going to cost a lot more, unfortunately, at the moment to get those fixed, and you may find yourself that your insurance policy can't cover it. And you may not have appreciated what you had in your home. I mentioned you may have done home improvements over the years. You may have chosen better quality fixtures and fittings, whether they're in the bathroom or whether you've got a fine wardrobe, even your own possessions, your own valued possessions. I think the guys most of them might have their golf clubs insured. Yeah. Women need to think about their own valuable accessories, whether it's handbags or jewelry, clothing. What would it cost to replace those items if for some reason they're either destroyed because of a burst cylinder in the attic space or as a result of a fire in the home? You're going to be left not being able to replace those things that are important to you. And that's what underinsurance is all about. You do need to remember about when you go to look at your insurance policy.
And so how often should people be looking to update their home insurance?
Well, we have our own campaign out to try and raise awareness on this here. And our advice, first of all, is don't just renew, review. So people renew their insurance annually. There are options out there to go for a 2-year, maybe 3-year policy where you have it with the insurer. But annually is the norm, and unfortunately over the last 2 to 3 years we have seen that rapid increase in inflation. So that would mean that if you haven't reviewed it in the last 24 months, even the last 12 months, you're bound to be out of kilter with the open market prices there for repairs. And there is a difference between market value of your home and actually replacement and repair costs. So just remember that you may feel your house is valued at a certain amount. That doesn't necessarily mean you'll be properly insured if you had to rebuild it or repair it.
Yeah, can you explain this to me? Because I do think a lot of people trip up when they are insuring their home because they might go for the market value. Is that a common occurrence that people are accidentally doing?
That is a trap a lot of people slip into, and you could be okay because house prices have increased, but our advice is to look at the Society of Chartered Surveyors of Ireland. They have a great little tool there to value your home in terms of rebuild and repair costs, and that discounts the market value of a house in that locality. You could have built a fabulous house in a rural area or a less populous town or village, and just because the other houses around it are worth something does not mean that will cover your replacement costs. So it's really important to see what size your home is, what you have in it, the finishes, the panelling, the wooden floors, the actual outbuildings, if you have garages, if you have sheds. All of those need to be taken into account, and you can't just compare your home to your neighbour's home. And as I said, the Society of Chartered Surveyors actually have a really good table that gives you 2-bedroom, 3-bedroom, semi-Ds, detached homes, gives you some guides on the actual square footage of a home. That's where we would recommend you go and check before deciding if you're not really experienced and what it might cost to rebuild. They renew that every year, and they give the latest house building and house renovations guides there for consumers.
And I know with that free tool that not every home will be covered by the tool. So there'll be people who might have a period home or have specialised material within their home. So what option do they have if they can't go to the Society of Chartered Surveyors to calculate their rebuild costs?
Well, to be really accurate, we would suggest you get a surveyor themselves to come out, and someone from the insurance sector as well can come out and look at the building itself and do a specific bespoke assessment of your building, and that you can get it done that way.
So would people have to be doing this every year if inflation is going up so rapidly in Ireland?
I think we would be safe to say inflation seems to have peaked at this point in time. So it's still really important to continue looking at your own valuation there, because it's still very difficult in terms of labour resources and availability of builders. So prices there are still increasing. So I think it is important to ensure that you don't compound the problem. So as I say, don't just review every year. You may have done some work that you've forgotten about. You may have just added on a conservatory or a sunroom. Those are the things that you do forget about.
And what would you say to some people who say, look, I don't want to have to keep checking my insurance every year. I'm just going to overinsure to cut out the risk of falling into underinsurance. What would you say to that?
Well, we would say make sure you're not overinsured, because, look, we don't want to be unnecessarily costing consumers money, and that's not a solution either, because really it's important to be accurate, and that's the way the insurance premiums work. There is an average clause, and if you do have a problem, the insurer will still look at the value of the house and the cost of repairs, and that's not going to actually
benefit you.
No, you won't benefit from doing that if you have overinsured there. You really need to be accurate. I must admit, I have to say, even before I came over to do the interview, Caoimhe, I went on myself and I used the Society of Chartered Surveyors tool to value my own home. I did say I was looking to get some renovations done, and I have to say I need to phone up the insurer now and make sure my policy is updated, because I am completely underinsured.
Oh, really? Okay.
Yeah, I'm sorry.
Everyone is affected.
Oh, yeah. Look.
And for people who are underinsured, like yourself, are insurance companies notifying people who are underinsured?
As you mentioned at the start of the interview, the central bank has written to all of the insurers and their Dear CEO letter, and they have put it up on their own website as well, the importance of raising this matter with policyholders and consumers. So the insurers have, right, for the last 12 months, they have been communicating with their customers and letting them know that this is a real issue. They've been writing to all of their policyholders. Unfortunately, some people just see that envelope coming through the letterbox and it drops on the mat and gets put over the pile of junk mail. So whether people have picked up the message or not is another matter, but that's why we've added the actual media campaign we have ourselves to get it out on the radio stations to tell people this is what it's all about. Underinsurance is important to address. So the insurers themselves are communicating. And as I said, the central bank is communicating with both consumers and insurers themselves.
Yeah, it's very important, because some recent research by Zurich found that 1 in 5 homeowners have never reviewed their home insurance costs, their rebuild costs.
That doesn't surprise me. People forget how quickly time passes between renewals, and certainly people are used to shopping around now. There's a lot more people shopping around, and that's an opportunity to let them know of your current configuration at home, or even go on before you do the shopping around, go on to the tool that the Society of Chartered Surveyors has and get your own estimate of rebuilding, and at least you can feel comfortable with what the person at the other end of the phone is advising. Also, I would advise to your broker. If you use a broker, they can be very helpful there in giving good advice on that as well.
So just to wrap up, Moyagh, your top tips would be?
Top tips is don't just review. Definitely. And great tool is the tool that the Society of Chartered Surveyors has, a completely independent estimation tool there. So before you renew, look at that. Make sure that you have your rebuilding cost jotted down there. We would also advise people in your own home, make sure you take a walk around each room and look at everything closely. And you may have forgotten stuff under the stairs, you may have forgotten valuable laptops and
instruments,
cameras, instruments in particular, because they can be very expensive, and photograph them as well. If you can, it can be really helpful if you've kept a receipt for a valuable item that you bought or someone bought for you, that you can keep a track of those. And don't forget about the outside of the house. Look at the garage, look at the outbuildings, make sure everything is You know, you have a little inventory there to help you tally everything for the quote when you go on to your broker or your insurer or online. And just make sure that you haven't forgotten anything and that you do it regularly.
Great. Thank you so much, Moyagh. And just one last thing before you go. So, Moyagh, according to a survey from Aviva, 1 in 5 people cannot afford to pay any more for their home insurance. And this is seen in particular in households with kids and those aged between 35 to 44. What is your advice to people then who find out that they're underinsured, but they can't afford to increase the amount they're paying on their premium?
Well, the first thing you don't want to end up doing is having no insurance. So I would advise you talk to your broker, talk to your insurer, because they can provide instalment payments as well. That's another way of trying to spread the payments over a longer period of time instead of paying a large lump sum. Really what we wouldn't want to see happening is someone having a calamity at home and then they're left significantly out of pocket. The other thing is, you know, the insurance market has been, the prices have been improving, and shop around. There's always new business offers as well, and you can do better than maybe you're currently getting quoted by shopping around and getting new business quote. So that's also advice we would say, but I would not advise people not to have the proper cover.
Thank you so much for all your advice today.
Protect yourself from the unexpected on bonkers.ie. Get the best rates on life insurance, mortgage protection insurance, home insurance, and car insurance.
So welcome back to my favourite part of the show, Daragh, the true or false section, where I will check your knowledge on home insurance and find out the answers to some of the more unusual home insurance questions. So are you ready, Daragh?
I am.
Okay, so here we go. True or false? The roof you have on your home will impact your ability to get home insurance.
That is true.
It is true. So if you have a flat roof or a...
Thatched roof?
Yes, you can be denied home insurance as an insurer can see your roof as risky. Now, this might be because in Ireland, where it's very rainy, we have up to 225 days of rain a year. And if you have a flat roof, you're in danger of accumulating that rain, which will cause your roof to sag or to leak. So you might not be able to get insurance. Now, you were mentioning thatched roof earlier.
Yes.
So why?
Fire is the big issue there. Now, there probably won't be many people, but let's think about thatched roofs.
1,000, I think. 1,000 in
is
Ireland.
there?
There
Okay,
are.
like that is just another thing to take into account. But yeah, thatched roofs, fire risk, flat roofs, flood risk.
Yes. Next, having a dog can impact your home insurance, true or false?
Oh, false, no?
So it kind of depends. It's true or false. So like, although an insurer won't take this into account, you probably should, because if we look at the UK, Aviva released their findings that dogs were the root cause of up to 800 claims a year in home insurance. So these claims are valued at around €1,150 for each one, and they range from dogs eating the edges of tables to eating hearing aids and dentures, breaking laptops. So, Daragh, if you have a dog, it might be worth considering getting contents insurance.
I thought you were going to say it might be getting rid of it.
Yeah, well, you could do that either.
I don't have a dog, but this is making me reconsider.
Okay, next one. So going on holidays won't impact your home insurance.
False, it can.
So yes, Daragh, you are correct. Depending on the length of time you go away for, it can impact your home insurance. So for most standard home insurance policies, they will only cover you for 30 days if you leave your house vacant. However, this can be 60 days. It just depends on the insurer. So if your home is left unoccupied, your policy will then exclude the ability to claim for certain damages, which could be like theft or vandalism, broken windows or doors. So I think it's something a lot of people don't know.
Yeah, read those T's and C's, as I always say.
Yes, you are a fan of the T's and C's. Now, next, so I only need to take out home insurance if I own my home.
I mean, I only take out home insurance if I own my home. Well, false, although it'll be difficult to do it if you don't. I mean, usually it's up to the owner to take out the home insurance.
Yes, so you are correct. I threw you there for a bit, but you are correct. So if you live in a rented property, your landlord should be providing you with buildings cover. And this is the same if you live in an apartment block. As you mentioned, it should be covered under your buildings cover for the block. However, it is important to check with your landlord or developer of your apartment block to see if you are covered or to what extent. And you really should be getting contents cover.
Yeah, I mean, I would say to all the renters out there, and there's more renters than ever, you should have contents cover. I mean, some insurers now sell it as renters cover and not just contents cover, which is kind of handy in some ways, although it kind of might confuse things a little bit because it means there's like another policy out there, but really it's the same thing.
Great. So Daragh, to finish off our episode, can you share with us how people can lower the cost of their home insurance without sacrificing their level of cover?
Yeah, so there's a few things you can do. The main thing is to make yourself a safer bet, and this goes for all forms of insurance. So look at security measures. So whether it's a fancy burglary system that maybe, or alarm system that you could get in, maybe it's putting locks on the windows, things like that. Anything that makes the home more secure. Fire alarms, obviously, as well. Smoke alarms, getting them installed. Also looking at the excess on the policy. So the excess is the amount that you pay yourself first in the event of any claim. So if, let's say, there was minor flood damage and maybe there was like 15,000 euros worth of damage and you had an excess for 500 euro, you wouldn't get the first 500 euro. It does mean though as well, if you have a higher excess, any small damage and small claims won't usually be covered. So that's just something to kind of be aware of. You can put timer switchers on your lights as well. That might seem like a strange one, but again, that can help reduce your chance of getting burgled and make your home safer. You could look at getting a multi-year policy as well. So these are relatively new, and this is where you're guaranteed the same price for maybe 2 or 3 years. And obviously in a period of rising inflation, which is where we are at the moment, inflation is running still at 7-8% a year. You can kind of lock in today's price for the next 2 or 3 years, which I think is really, really handy as well. And then also just making sure that you are not actually over-insuring as well. So I know we've talked about underinsurance, but when you are insuring your property for the buildings element, sometimes people make the mistake and they insure it for how much the house actually costs to sell. It's the rebuild value. And usually the rebuild value is less than the sale value, but sometimes that can change.
Great. Well, thank you so much, Daragh, for all your top tips. And I'm sure that everyone's going to be a lot more clear on home insurance.
Thanks for having me.
That brings us to the end of our home insurance special. I want to give a special thanks to Daragh and our guest speaker, Insurance Ireland CEO Moyagh Murdock, for her insight and advice about underinsurance. Lastly, I want to give a shout out to our research and editing team, so thank you Theo and Zoe. Remember, if you're looking to purchase home insurance, head over to bonkers.ie and use our free home insurance service to receive a quote. You can save an extra 10% on your premium by purchasing a policy online through bonkers.ie. There you can also find the best value energy, broadband and insurance deals on the market and more. Don't forget to like and subscribe to the bonkers.ie podcast on your podcast app of choice and follow us on Instagram for our top home insurance and personal finance saving tips. Bye for now.